Hi, my name is Nur Afif Amira binti Azarimi, and now I will present about Sunway Real Estate Investment Trust, or also known as Sunway REITs. Sunway REITs is a company that have largest portfolio in real estate investment industry. They have 20 assets from 5 different segments that located all around Malaysia. Their main principal activity is to provide rent to their tenant. They start to being listed in the Bursa Malaysia starting in 2010. And now, I will present about the disclosure of MFRS 108. In 2020, Sunway REITs had replaced their MFRS 117 with MFRS 16. On the other hand, they also made a reformation on the interest rate benchmark for the MFRS 9, MFRS 139, and MFRS 7. On the other hand, in 2021, Sunway REITs had changed their accounting reporting date. Previously, their accounting reporting date will end on 30 June every year. However, it had been changed into 31st December every year. Apart from that, they also made an amendment on certain MFRS such as MFRS 3, MFRS 101, and MFRS 108, MFRS 16, and MFRS 4. Other than that, there are also second phase for the reformation for interest rate benchmark for MFRS 9, MFRS 139, MFRS 4, and MFRS 16. Next, I will present about the disclosure of MFRS 110. On 2020, there's one event that occurred after the reporting date, which is on 7th of July 2020, which is renewal of master lease agreement that involves Sunway Resort Hotel, Sunway Pyramid Hotel, and Sunway Hotel Seberang Jaya. They enter into an agreement for lease for another 10 years. Other than that, for 2021, there's no other event that occur after the reporting period. And now, I will present about MFRS 116 and MFRS 139. Firstly, MFRS 116, which is about PPE. There's no property that being disclosed by Sunway REITs. However, they do disclose their office, computer equipment, and furniture and fitting. Both of those assets had been depreciated by using straight line method over the useful life. As for MFRS 139, there is no asset that being impaired of using that standard. Sunway REITs use MFRS 9 to record their impairment on trade or receivable. For key audit matter, all of important information had been disclosed on the audited financial statement by their professional judgment. Now, I will present on the financial statement analysis. Firstly, profitability ratio. The first ratio is net profit margin. On 2019, the net profit margin is 87.7%. Meanwhile, on 2019, it dropped to 49.95%. Second, asset turnover ratio. For 2019, the asset turnover ratio is 0.056. Meanwhile, for the 2020, the turnover ratio dropped to 0.050. And lastly, return on asset. On 2019, the return on asset is 5. On the other hand, in 2020, the return on asset is only 2.46. Next, liquidity ratio. Firstly, current ratio. In 2009, the current ratio is 0.03. Meanwhile, in 2020, the current ratio is 0.12. On the other hand, quick ratio. Quick ratio for 2019 is also 0.03, and for 2020, it increased to 0.12. And lastly, inventory turnover ratio. For this ratio, it is non-applicable since that Sunway REITs provide services, so they have no inventory. The last ratio for the financial analysis is solvency ratio. Firstly, interest coverage ratio. For 2019, the interest coverage ratio is 3.43. However, in 2020, it dropped to 1.799. second ratio is debt to asset ratio. Firstly, in 2019, the debt to asset ratio is 0.12. On 2020, debt to asset ratio increased to 0.436. And lastly, debt to equity ratio. In 2019, debt to equity ratio is only 0.75. However, on 2020, it increased to 0.833. That's all from me. Thank you.